What's up, guys? It's February 15th, 2024. Hope you guys are doing good. Had a small pullback bull trend, but it was weak. Well, bar 1, continuation from yesterday's uptrend. Bar 2, follow through. Bar 3 looks like a 50% pullback, and bar 4 is a breakout bar, but it has a lot of overlap. What I mean by breakout bar is it's breaking out bar 3's range, so I think this is a 1-to-1 move, but I wouldn't take it because it's the first 30 minutes. Yeah, so that's what I meant by the breakout. It wasn't like a good breakout bar. Bar 5 is a 2-bar reversal. Well, bar 5 is a down bar that created a 2-bar of reversal with bar 4. And bar 6 is bouncing off yesterday's high, kind of created a double bottom with bar 5. First 6 bars of the day. It looks more bullish, but there is bear bar, so we could have a range day. I was leaning to more of a range day, but we were also trading above bar 1's like 50% level for the most part. Make it easy to see. So the majority of the first 6 bars price action is above. That's so bad. Okay, there we go. If you take bar 1's range, we're trading more in the 50% of it, so the bulls are looking for continuation of bar 1 to make a bull flag, and they get that. Like, that creates a wedge top of bar 6, 7, 8, 9, 10, and 11. Wedge top here, triple top here. You guys see that one, right? And where was I? Oh yeah, and right here. That's very steep. They break out, and then bar 12 is a pretty nasty looking bar. Bar 12 looks big enough for a leg 2. I actually got trapped. Where did I get trapped? Going short here, thinking we were going to get continuation to the EMA. But I'll go over the leg 2s after. So bar 12 is big enough, is a good rejection. It's taken out about 3-4 bars, but there's a lot of overlap. Bar 13 bounces off the EMA, so it's not the best bar for the bears. You definitely want to start seeing closes like see how the bulls are getting good multiple closes above the EMA. That's what we want for the bear, multiple closes below the EMA. This does look like a head and shoulders reversal pattern, but if we take, I don't know what just happened. Here, here, and here. And that's kind of why I went short here, but then I got out on this bar because it was starting to become a reversal. And then when this bar got put in, it made a little bit more sense for it to be a wedge bottom bull flag with 3 pushes down here. I only had 2 contracts and then I started scaling in, so it was okay. I'm trading the micros, not the Emini. Where are we? So bar 18 is a leg 2 for bar 12 and 13. And then bar 21 is this bull bar here, and it becomes a 2-bar reversal for the bears, bulls, for the bulls. We're trading above the higher time frame, so I have a bullish bias. That doesn't mean I'm not going to go short, but with control over time, it's more bullish. Bears got 1 bar below the EMA. Well, technically this bar too, but that's kind of rangy. There's a doji there. They got 1 bar, and then it pushed up. So with control over time and more bullish price action, I don't think this would be the best buy, but because this could become a sell vacuum into the EMA. But the pullback had no continuation, and that would be a 3rd leg down. So if you bought this bar, that would be like fading a 3rd leg. Bar 24 pushes up into the EMA, but bad close. I think there's a lot of sell orders on bar 18. Bar 25 is a really bad follow through for the bulls, but however, bar 26 is looking good. Bar 26 was just I can't remember how the bar formed, but its close was really strong. A 1-tick close. That's pretty rare to see it close this strong. I don't see too many closes that have, it's a shaved bottom with like a 1-tick top. Bar 27 is follow through, and it's an important bar. It actually gave me the indicator that we should be long and not short on bar 29. I just sat through that as a pullback, and the idea bar 27 gave me was that we closed the bull bar above bar 19. Bar 19 is strong. When I saw this, strong for the bears. Well, if it was strong for the bears, it would have had follow through. Bar 19 looks strong for the bears, but then bulls closed above it, so they're taking out bearish market structure. And then once I saw this, my next target was going to be another close above bar 12, right? Same idea, just a little bit different. There was news today, so I didn't hold. I missed a portion of this trade. I got out on there because that was kind of my target. That was a trend line break. There was this trend line that I was trading here when I got long. You can see it broadens eventually. What am I doing? So breakout, good bearish, good bullish bars. This is a range bar, but still a continuation with a bull trend. So the context is different. Yeah, and they're closing above bar 19. So pullback bar 29, and then it becomes a bull flag with bar 30. There's the bull flag. Bar 31 is a breakout. Bar 32 is bad follow through for the bears. Bar 33 is a breakout from bar 32's range, and this is now we have a triangle here with the EMA. Bar 34 is great follow through after bar 33. However, the price goes sideways for a while because I think there's a lot of sell orders. I saw this pullback, but this looks nasty. I had about 4 or 5 contracts. It turned around on me for a split second right here. Excuse me. And once I saw this, I had to change. I had to think differently about the day because there's news coming up. There's another speaker, and I'm not saying I trade the news, but what I am saying is that the markets can become very volatile when there's people speaking. And I think this was a good exit because this was the first trend line break, and the first trend line break is a good fade. So this was the first gap bar after about 20 bars. In reality, this should never happen, and the bar should stay above the EMA. So this is not the best 20 bar gap setup. But from a trend line break perspective, this is a bull flag on a different time frame. Remember, we talked about that in one of the videos. Like so right here, right? You see that trend line? This is a bull flag because it breaks and comes back up. So that's a bull flag on a lower time frame. This would be a bull flag on a higher time frame. Wait, let me think. No, it'd be a bull flag on a lower time frame. So we break the trend line, and it's a good fade to back to recent highs. And I took that. I took my profits. It was pretty good. There was a speaker at 10:15. I was a little bit annoyed. I saw this rip up, and then I just kind of let the day play out to see what happened. I ended up buying this bar here, thinking we were gonna break out. I was looking for this price action, and I got stuck. I had to hit out, and then I bought, and I got out. I got out like around here, a little bit after hours. So we were around this area. I'm gonna start at bar 44. Bar 44, strong breakout after a trend line break, bouncing off the EMA. Bad follow through right here. Really bad follow through with this bar for the bears, and then good follow through for the bulls. Closing. Remember, I said I was looking for a close above here, and if we close above here, I think we can go higher. And we started to close above there, and we grinded against the trend line for a little bit. Here's another bull flag. I think that I didn't trade any of this, but I think it would be really hard to hold because the bulls are taking long. The pullbacks are very deep. That is not ideal for a bull trend. Bears are making money, shorting new highs. New high, bears got short. New high, bears got short. New high, bears get short. New high, bears got short. And the reason bears are getting short on new highs is because every pullback can turn into a reversal. Every pullback is a reversal attempt. So if you think about a new high, bulls will be taking profits at new highs. So bears want to short, hoping for a full-on reversal. But they don't get that. They get trapped. Bulls buy the EMA at the average price and trap the bears, and that's how trends continue. Look. So a bear went short here and got trapped right away, because if a bear didn't go short here, that tick wouldn't exist, right? See, no tick, that means a bear didn't get short there. However, look at bar 76. Bears did get short here, and they got trapped. And then they had this short here. Look. I'm not making this up. See? Oh, wait. I said here. So bears get short on there, right? So bears get short on 76, thinking this is going to reverse. They get trapped. They short this high because we're in a range-bound environment. They get out right here. They lose about 1 tick instead of losing whatever that many ticks is, points. about 6 points. And that creates a uptrend because bears have to buy back their shorts, and bulls are buying the EMA like they have been all day, systematically buying the EMA. Yeah, that's I'll just tell you guys where I got out on my other trade. I actually did get short here, but I just hit out as soon as we started to break the body because I was not playing around how much control over time the bulls have had. But the reason I was short here was because, where's bar 1? Oh, I turned on. Because C bar 1, and I remember I said, I was like, I think this could be range bound price action, and because, well, bulls bought this bar and then bears shorted that bar, so that would be like range bound, and that is a range right here, but the bulls broke out. And that's why I got short here, is because I was really looking for that end of the day sell vacuum, test of the open, maybe test of yesterday's high. However, we're in a bull market, so it just didn't happen, and I was ready to get out. Maybe I should tell me in the comments if you guys would like this pointer instead of me, like, move. I'll still draw around like this, but maybe this will just be easier to follow when I'm not using the lines. Let me know what you guys think, because I want this to be easy for y'all. So I'm going to go over the leg 2 moves and then the market cycle. Leg 2 moves on trend days I think are kind of funny because no matter what I show, it's going to get hit. So we have to have a good way to show. What is that? So maybe you could think to yourself, what makes a leg 2 for you? Is it as soon as you see an opposite bar, that's the start of a new leg? Is it when you see a trend line break, that's the start of a new leg? Because look at this. This is a micro channel, but it has an opposite bar. Bear channels start in bull trends, and bull trends start in bear channels. So this is still bullish, but it's the start of a bear channel here. And then look, this is actually a trend line break. 50 and 51 is a trend line break. And then that's when the market goes up into another channel. And now look at this opposite bar. 57 is an opposite bar, like 49, but 57 is also breaking the trend line. So you guys have to ask yourself, how do you like to read it? How do you want to read it? I'm in between opposite bars and trend line breaks. For instance, I wouldn't count this as an opposite leg, but as soon as we get 59 and another one, then that's where my leg 2 would start because we broke the trend line. This is not a very good trend line. You guys get it? So here we go. So we saw this one, leg 1, leg 2. I'm going to try something a little different here. Saw this one. See, this is a deep pullback. You could do that if you're fast enough to understand this is a trend line break on another time frame, on a lower time frame. I'm going to keep that there because I'm going to show you guys on the next break to the front. So there's a leg 1, leg 2, leg 1, leg 2, and these are all scalping targets. Leg 1, leg 1 to the body, leg 2, leg 1 here, pull back. See, this is an opposite bar, but I didn't even think of it because it's still within this overall channel. However, look at bar 29, it's an opposite bar and it breaks the channels. You guys get what I'm saying now? So there's no right or wrong way, but for me, I like to just keep in the back of my head there's multiple ways to do this because you never really know what's being looked at what time. So there is a complex leg 1, leg 2 there, and then a bigger leg 1, leg 2 there. If you guys don't know what a complex leg 1, leg 2 is, check out chapter 3 in the blue book. It talks about what a complex leg 1, leg 2 is. So this bear leg is a complex leg 1, leg 2 because it's overall. This could be a leg 1 opposite bar. I'll start there. This could be a leg 1 pullback, leg 2. See how it was met? And then you see this bear bar. That's what a complex. What is it already red? Oh, I see. So you guys see how this blue line is a leg 1, leg 2. This looks a little confusing. I'll delete it. And then the red line is the bearish bar, and that's within a bull trend. So it's a complex leg because it's within the bull trend. Just delete it. It looks confusing. Opposite bar, trend line break, strong pull. I'm going to pull to the top of 49 and put it below 50. And wow, look at that. Look at it. Bar 80 met it. This is range bound price action though. I did say bull trend in the beginning, but has so much overlap. It's hard to, if you're scaling in, you're definitely buying lows. I scaled in and got trapped a little bit. Where did I bought this close and then that's where I got trapped. You can short, but I wouldn't. Al recommends beginners to stick to the trend, and I agree. It's just your life is easier. Where are we in the market cycle? I mean, there's also some leg 1, leg 2 moves here. These are, see, sometimes, oh, wait a minute. Let me go for body to body. Yeah. Double bottom. A double bottom is made by when bears get short. So bears get short here. I don't want to make the video too long. So this is how double bottoms are made. Bears short bar 71 and they get trapped. Instead of getting out for a loss, they want to get out at their original target, so they wait for a pullback and then they get short again, and they either scalp out at 50% for a break-even trade, or they can hold for, so if bears short here and bears short here, they will make money at their first entry, a couple points. They get out, and that's what creates a double bottom. Bulls buy lows and in range, bears buy back their shorts, and that creates the rip. Let's see if there's a leg 1, leg 2 move EOD. Oh, no, there isn't. But I had 550 as my target because I'll show you. I looked at this right as soon as bar 20 got printed, or bar 18. I was looking at this. Yeah, see, 550.75. But wait, let me do it right exactly. I was doing bull bar to bull bar. So yeah, right there. I didn't get to get the full trend because around here was guest speakers, so I just stopped trading. I was a little bit annoyed that this went right in my favor as soon as I hit out of this trend line break. So I was like, I'll just chill for a little bit. Then of course I buy the highs, but it's okay. I made the money back over here. So now we talk about the market cycle. I didn't mean to go off on a tangent there, but these things all start to add up. Like over time, you guys keep watching, you start to hear your own voice in your head, and it works out nicely. So where are we in the market cycle? I think today was a channel day. The reason I think that is because yesterday ended in a spike. The market cycle, it starts with a breakout, goes to channel, range, and breakout. When we get a breakout, that is a fresh, that's a reset. You could say we are range bound, and we definitely are range bound, but on a different time frame. This is a one big bull bar, and then look, the pullback start as soon as the first opposite bar is printed. So big bar, and then this has to be a big bear bar because it starts as a bear bar and closes as a bear bar. So then we enter the channel phase. Is two-sided trading, but better to be bullish. And after a channel, now the market's gonna reset, and then it's gonna go range, and then reset. The reason I said the market can reset is because we can also get a breakout of a channel, because what is a channel? It's a sideways range. So there's different ways to look at the market cycle, right? Well, there's not different ways. There's different ways to interpret the market cycle. Because look, we are overall within a range, so we are still ranging on a higher time frame. So maybe when we get a breakout here, the market cycle resets. I cut my mouth today, and I can feel it while I'm talking, so I'm gonna wrap it up. Here's a lower high. That was so sloppy. It'll be interesting to see what happens tomorrow. Maybe we get a gap down, maybe we get a gap up. Didn't really break out of last week's range. That'd be this purple line. If we do, my target's that blue line. I don't think that's really reasonable to look for tomorrow because that's a really big range. It's I think 110 points was last week's range. 111 points. I don't think we're gonna get 111 points tomorrow unless we have news, and then maybe there's a 70-point bull bar and we get the 30-point day maybe. I don't know. Yeah, I hope you guys are learning. I hope you guys are studying. I don't know why I have the Nifty there, but I've been looking at crude oil. I'm not trading it. I traded it on the sim just to feel it out, and I'm definitely gonna start trading crude oil later in the year because first principle markets break out. They break out channel, trend, reset. That can be applied on any stock, any time frame. It happens. That's how the stock market operates. It's a cyclical. So I hope you guys are studying. I hope you guys are using your stop loss. Today was a little bit longer. I try and keep these videos around 10 to 15 minutes, and I just want you guys to get information after information after information. I'll try and make tomorrow's a little bit shorter. We're going to talk about the first 6 bars, 2 legs. We're all 2-legged trades, and then where we are in the market cycle. If you ask me, I think that's all a good trader needs to know to make money. You identify that market cycle, you identify where you're at, and then that's how you place your trade. That's what I've been doing, and the markets have been looking a little more clear to me. Check out Al Brook's page, check out Quant Systems page. Those guys have a lot to offer, and Quant Systems was designed off Al Brook's methods, so you're not like learning two different things. You're just learning a different aspect of the way Al Brooks trades. I really like Quant Systems. Check them out. Check out the page. Use your stop loss. Thank you for the support. I hope everyone's having a good weekend. I hope you guys have a good weekend. Stay safe. Study. Do like 10 charts and mark it up. Let me know if you guys do it. Have a good one, guys. I'll talk to you later.